12 days of losses, finally snapped, and then we're down again. So is the path of least resistance to the downside for oil still?
I think that there potentially is more downside. When we talk about typical bear markets for oil, they are typically 30% sell-off from peak to trough. So 28% sell-off, what we have in line with a technical average. Certainly it's not warranted from a fundamental perspective. I think fundamentally some degree of price softness is warranted from the October highs because we very swiftly moved from being in a state of undersupply to being in a state of oversupply. But we're not terribly oversupplied. This is not the glut that plagued the market from 2014 through 2016. We're oversupplied by about 500,000 to 1 million barrels a day in a market that consumes 100 million. So the market, the margin really isn't that great.
So Federal Reserve Chair Jay Powell spoke in Dallas last night talking about this idea that there might be some signs that there are slowing points in the economy. Does that mean that the demand profile for crude is going to be much more in play, not just from the U.S., but elsewhere around the world as well?
Demand is certainly much more salient now than it has been over the last couple of years. And if you look at all the major prognosticators, they're taking their demand growth estimates in one direction and one direction only, and that's down. But they're still showing all of them demand growth and growth of over 1 million barrels a day. So I think that the demand picture is not quite as robust as it had been, but it's certainly relatively strong. And you look at China, most important market for demand growth, with the natural maturation of their economy and the movement from an industrial economy to more service and consumption oriented, there's going to be a natural slowdown in what they need for diesel, but an increase in what they need for gasoline and jet fuel. I think that remains sticky even in the case of higher interest rates.
Let's switch to the supply side. We got Iran sanctions in play. Many people said we weren't making a big deal enough about this. It's a huge move to global supply. Yet it doesn't seem like it's having as much of an effect, the idea that sanctions have been placed on Iran. How important is Iran and those production curbs to, I guess, the overall energy thesis at this point here?
It's very important because a big part of the reason why we moved up above $75 a barrel was because of the Iran sanctions. Those turned out to have way more bark than bite because of the generosity of those waivers far exceeding anything that anyone was anticipating. That's a big part of why we're moderately oversupplied at this time. So I think it is a big part of the equation. We'll have to see what happens in 6 months. But we've seen that the Trump administration basically in the choice between low gasoline prices and Iran chose gasoline prices.